Lovely to see you all here for what I promise will be a really interesting conversation about this great Kenya transformation. And there might even be some people in the audience, Governor Njoroge, who are thinking, hang on a second, no one told me about this amazing transformation. It's actually happened very quickly. And we're talking about an anniversary of about 10 years or so, give or take a couple of years, of something called M-Pesa.
That's correct.
We're going to talk about that in a little bit because it's something that's just revolutionized Kenyan society in some ways, and it's being rolled out in other countries as well, so it's a massive success story. But when you think about this transformation of which we speak, how do you feel? You must be so proud of what's been achieved.
A lot has been achieved in the 12 years since the launch of M-Pesa, and yeah, it has really transformed the country. It has transformed the way we do business. For instance, I've been there now 3.5 years, and not once have I gone to into a brick-and-mortar bank. So the transformation from brick-and-mortar to digital platform, meaning the phone, is almost complete. At the same time, so for instance, even transactions, more than 85% of our transactions are on the mobile devices. In terms of value, they're probably 10%, but most of our transactions are on mobile devices. At the same time, it has had a significant impact on financial inclusion. We started off at about 26% financial inclusion. Now we are well over 75% included in the financial system.
That's a remarkable figure. And it's a really short space of time over which that's occurred.
That is correct. And behind this is not just a number. You've actually had the transformation of lives. So it all started because there was a great social need, a great need in terms of transferring money value to others in the, from the people that were working to, say, their parents and relatives in their rural homes. And so there was a clear need. But at the same time, once that need was fulfilled with the launching of M-Pesa, there were also other things that happened. For instance, now you can make transactions without really, as I said, going to a brick-and-mortar building. And the savings that involves are tremendous. And there has been other services that have started up. So it really has transformed society.
Well, we're going to get into some of the examples of how these lives have been transformed. But before we do, anyone who's been doing fintech over the last 3 years and has seen me speak before knows that I love to get the audience involved. Can you raise your hand if you've ever heard of M-Pesa? I can just... Right, that's brilliant. There's actually quite a lot of people. A few hands, though, still down. So for those of you who don't know, this is basically, this is transactions that can be made all on mobile. And when this first started, this involved people not using smartphones. This was people SMSing with a network of agents, and this had never been done before. The agents across Kenya were able to make sure that people got their money. It meant that a migrant worker who went to Nairobi could send his tuition fees to his daughter, let's say, in a town far out. Totally revolutionary. But it took a great deal of collaboration, didn't it, to make this happen, because this was Safaricom, this was Vodafone, this was backup systems in the UK, this was then a transition to a system in Kenya itself. Just walk us through how you get to that place.
Okay, so the way it worked, and this is sort of the summary of it, clearly Safaricom, indeed Vodafone, which was its shareholder in the UK, had bought this product, and they thought it would be interesting. And so this is a telco. In this case, the local telco is Safaricom. They came to the central bank around 2006, and they said this would be a good idea. Maybe it will be useful for society. Why don't we launch it? And like everything else, when you are given a product like that, is very much proof of concept. You need to bring it to a point where it is actually useful in particular ways. And I think the first point here was that the central bank was innovative enough to appreciate that this would be a useful product. And mind you, there was no law on this sort of product. So this is a national payment sort of system product, and we didn't have any national payments law. But the central bank was willing to discuss and indeed to approve a product that would make this, that would actually do this transfers and person-to-person transfers. But the point is that over a period of time, the product was tested in particular ways, and obviously very concerned about the risks. And eventually, when the risks had been mitigated sufficiently, the central bank approved this to be launched in terms of just as an exemption. So in a sense, there wasn't a law that you could say surrounded it in particular ways. So there is we called it the test and learn. Now they call it sandboxing. So,
right. So you were there way ahead of everyone else.
So even fintech, we had fintech before fintech was invented.
I bet you love rolling that one out. We had fintech before fintech was invented.
Yeah.
Okay.
But anyway, so the point here is that once this thing was launched, one needed to, in a sense, monitor it and be sure that it is growing in a proper way and there are no risks and things like that. So with time, I guess the rest is history, as they say. It's now virtually universal. For instance, penetration of mobile phone is something like 90%. We are 94%, I think, is the number. We have, for instance, all the subscribers, people who have subscriptions, not just to M-Pesa, but the other similar products, is something like 44 million, of a country of 45 million. So you can already see that you have virtual universal, well, I know there are people that have 2 accounts, but you have almost universal coverage in terms of these transfer products that are there, that started with M-Pesa. And that's really transformational. Now, it's not the end of it, but I think the point is, now that you have an appropriate platform, the other things that have begun to, let's say, grow on the side. And so you're creating a new ecosystem. So you have the rails. Now we are putting on the wagons in this ecosystem. So it really is transformational. But I think the most important thing there was the courage of the private sector, the courage and indeed the innovativeness of the central bank. And since then, of course, the laws have been put in place. So in a sense, we are backfilled. And there are other things also that we didn't start well. There was the issue of interoperability. And it's only earlier this year, that we actually had complete interoperability of the various systems.
Now, one thing you've also been encountering recently as well is, and I think it's particularly interesting because we're at a fintech festival, and so we're celebrating all the different ways in which fintech has developed. But in particular, the area of loans is one that is very much, it's a swelling area in the fintech space. And that could cause a bit of a problem. It's a bit of a challenge if you've got a system that lies outside the regulatory framework. So how is Kenya handling that?
Okay, so it's true, our ingenuity and I guess also excitement covers all the various products and loans of various kinds, person to person, and indeed other sort of products have been proposed, and there are some that have launched them in Kenya and other jurisdictions. But our principle is simple, which is similar products should be regulated the same way. So there should not be some sort of regulatory arbitrage. And in a sense, it is important considering the financial stability concerns and also consumer protection. So yes, on the loan side, you could say it's peer-to-peer lending, but the problem with that is you're not sure how well the various individuals are protected. And so in that sense, similar products, even to those that are borrowing, should be, in a sense, under a similar sort of regime. Not necessarily identical, but similar. So we are getting a lot of pressure. As a matter of fact, we do have a lot of innovators that are interested in launching this product. And our view is simple. We need to approve these products, not necessarily the central bank, but after all, there are other non-bank financial institutions that are regulated by other regulators. And somehow we need to bring all this under the ambit, or should we say the regulatory umbrella, or within the regulatory perimeter. There is a discussion, of course, with all the proponents of these products, but you can imagine what is also happening, which is there are risks, and this has already begun to happen, where people are getting too many loans, or rather they are overborrowing. And then you have some problems that will come to them later. In the banking sector, or rather in the financial sector generally, you also have credit scoring, so that in a sense mitigates this problem. But outside the perimeter, the problems can be quite large. So that's really how we are doing it. Of course, it involves also discussion with the fintechs. They need to understand that we need to have a conversation with them. And having a conversation with the regulator is not necessarily the equivalent of having a visit to your dentist. So I mean, it is good for everybody.
I wanted to pick up on that, though, because there will be people. There will be people here today, people in the audience, representatives of fintech startups, representatives of financial institutions that are developing specific products, and they may be thinking, how do I get into Kenya? How do I become a part of that fintech miracle?
Okay. Actually, there are a lot of people, innovators that contact us. And we have an entire, let's say, team of people in the central bank that specialize in this. Again, this is also innovative in the way we are handling that. But the point is, yes, we do expect you to contact us at the right time. And we, with other regulators, have conversations about the product that is brought to us. So in a sense, we are not quite the gatekeeper by ourselves. We have to work with other regulators. But the conversation needs to be started, and only the innovators need to start the conversation. Now, they should also appreciate that we'll need to begin from where the product is. And we need to move it from, say, proof of concept and from our perspective, the major concerns, we are not experts in the products as regulators. What we are experts in is on the issue of risk and maintaining financial stability. Now, innovators quite often do not see that as a big issue. So our conversation, in a sense, is not so much at cross purposes, is one of explaining to them the risks that we see and trying to mitigate the risk. I remember a conversation once with regard to somebody who brought, or a set of innovators that brought a product, and our question was, how long does it take for the transaction to get completed? And at that point, they said, actually 45 seconds. And our view is absolutely not. So they came back, I guess, a few months later, and they brought it down to 23 seconds. I said, no, absolutely not. So by the time they launched it, when we approved it, they had brought it down to 10 seconds. Now, from our perspective, from our perspective in the central bank, this was important to have it as short as possible, because even the phones, let's say you're having a conversation and it drops the call. Now, if you're making a transaction, you don't know whether the transaction has gone through or not, so you increase the risk in terms of let's say, consumer acceptance of the product. And that's not something that, let's say, the innovator knew. So I think it is important for them to appreciate this. Now, we have actually been having very good conversations with them. And I think they are learning a lot more. So you're bringing it all the way from, say, a proof of concept to, say, a product that you can, a better product that is much better in terms of risks. By the way, I should say that today we are very happy that we are here at the launch of this platform, Apix.
Oh yes. What do you think of this?
No, it's excellent. It's excellent. I think it's a huge milestone for the fintech journey around the world, for all of us, the entire ecosystem of fintechs. And the reason for that is that we can have even our own fintechs in Kenya. By the way, Kenya has a huge set of fintechs that are operating there. So yes, welcome into the competition. And they can then sort of join this platform. And by the time they come to us, we are assured of a certain minimum quality of the technology that they are using, meaning it's well coded. Also in terms of security, that there are certain minimum standards on that. It's true, we request the fintechs to do some third-party, let's say, sign-offs before we can approve them. But you can see that this is a platform that does that even before, that ensures that happens even before the product comes to us. And obviously, at the same time, it offers a huge new market to these fintechs. If you can survive in Kenya, you can survive somewhere else.
Although,
yeah.
do the journalist bit now, because there has been quite a bit of recent press, particularly over this craze for the loans, that Kenya should not be seen as a guinea pig. Now, what's the motivation behind this kind of thing?
Yeah, I think there's a lot of excitement about having your product proved in Kenya. And so this is the equivalent of if you, New York, if you can make it there, you can make it anywhere else. So there's that sort of sense. And in a sense, we feel that pressure as the regulator. But at the same time, I think it's also the gateway to the rest of Africa. And if you're thinking fintech, or if you want to be different here, you can also talk about Silicon Savannah. So if you're thinking fintech and thinking how to expand to the rest of Africa, I think a natural starting point, a natural gateway is Kenya. Also because it's much more advanced in terms of the financial sector and also in terms of the infrastructures and so forth. And it's also very well connected to the rest of Africa.
Right.
So in that sense, it's a natural place to start. But I think the point for us is it puts us under a lot of pressure as the regulator, which is okay. But I think the point is whoever is coming in, they need to appreciate that the regulator has a role. And also in their interest to launch in Africa, which is a huge market, they need to appreciate that there are certain responsibilities that they need to adhere to. Of course, a lot of them are also driven by the need to improve the lives of people.
Yeah. Well, let me jump in there.
Yes, please.
I always run out of time. I get so excited about these conversations. We have a little bit less than 10 minutes left, and I have so much to talk about, including crypto. But for a moment, I want you to step out of your role as a regulator, and I want you to speak as a Kenyan and tell me how you've seen this revolution in fintech in your country change lives and how that's made you feel.
Okay. So as I said, today and now, I can go out there, buy fruits on the street, at the street corner, and pay with my with M-Pesa or whatever other platform I'm using. And I expect that the lady who is sitting there on the sidewalk will accept my payment. No conversation. There's absolutely no conversation. Actually, in that sense, that transaction is as solid as any other transaction, as cash. And it isn't that she is more literate than any of these things. She probably is not as literate as, college degree, or any of these things. So literally everywhere in the country, you have this transformation, people accepting the payment via these platforms and so forth. So what has that done in terms of lives of people? It's true there has been improvement in terms of connection of having a bigger network. So for instance, I can borrow money from you if you're in my network, and if you have high net worth, I can always borrow a bit of money from you in particular ways. And that sort of social safety net works. But there's also other things, and I'll tell a story here. We looked at one of the platforms, one of the payment platforms. This is one where you can get microloans for very little, and or rather small size loans. And you can get this loan. Now you could stop at a traffic light, and by the time the light turns green, you've already gotten the loan, and actually has been disbursed. It's that quick. So this lady, we discovered that actually more than a third of the loans on this platform are actually obtained between 3 o'clock in the morning and 5 o'clock. 3 and 5 o'clock in the morning.
Okay.
Which is a bit of a surprise.
Yeah.
And actually more than that, more than 50% of the loans were to women, which was also a surprise. So we then looked around and we discovered the story is as follows. There is the street seller, the lady that sells fruits and vegetables on the street. She'll get up in the morning at that time because that's when the wholesale market actually is operating. So she will actually wake up in the morning, 3 o'clock, get her loan, and at that time in the day will make a purchase from her favorite wholesaler. She hasn't even left the room yet, or her house. Will then also send an order to the person who will deliver the product to her store. She'll get up, she'll wake up her kids, feed them, and send them to school. And at 6:30 or 6:30 in the morning, she's at her kiosk selling these things. So you can already see she's saving a lot in terms of her time and so forth. So there is an entire social transformation that is being supported by this ability to transact in the middle of the day, in the morning, and so forth.
However, and what you're saying is it's not just the ability to transact, it's the speed at which you transact.
The speed and the savings, of course, in time and so forth. But we're also a bit surprised by another thing, which is we discovered that at the end of the day, she actually repays the loan. Now, she had the loan for 30 days. Now, I am an economist, and if I have a loan for 30 days, I'll wait until the end. I mean, so we were a bit surprised by this, and we discovered that she wasn't crazy. She was actually very sophisticated in the sense that what she had figured out is the algorithm that is used by this in this platform. If she repaid every single day, the next morning she would actually borrow again. So she borrowed for 30 days. That would be sufficient for her to double her loan in a month, which was much more productive than waiting for, 30 months before she can actually double her loan. So she'd figured out the algorithm and figured out how to go around it. And that's fascinating. But you can see the transformation. So in a month, she can actually double the size of our kiosk and so forth. So the transformation in terms of the lives of people is huge in that sense.
But also you must feel, and let's go back to you being a Kenyan as well, you must feel, wow, look at my ingenious, fellow countrymen and countrywomen, how smart they are. And and previously people would have just said, oh, that's the vegetable seller, or that's the label. But now you're looking at it and saying, there's a very sophisticated bunch of people out there, and if you just give them the platform, they can shine.
Absolutely. But I guess there is, for us, this is not the time to sit back. Actually, that has challenges that are brought to the fore. Now, for the lady, the fruit seller, her greatest risk, actually, is we have to take care, of course, the cyber risk and security of the platform, and that is clear. She expects that to be the case, and we have to do what is in our power to make sure that her expectations are actually correct. But there's also something else. You could think now, and this goes to the point of expanding the ecosystem or filling in the gaps and, in my analogy, putting in the wagons. You know, about 70% of the shocks that drive people back into poverty are health related. So for this lady, her biggest problem is if she got sick. Because if she couldn't work for a day or two, that would be a direct income loss. Unlike, say, you and I. I have insurance, I'm covered, and it won't be an issue of income loss if I get sick. But for her, it is. So, in a sense, to help her, what we do need to have is some micro insurance. And this is why we are here, because the insurance sector is really the second one that needs to come on board. And that is really, and it's microinsurance for 2 or 3 days or a week or something like that. And that's something that we are learning from others, and we were quite excited about the discussion yesterday, for instance. That's one thing. There are also the other issues about savings products. Now, most of these people probably save under the mattress and things like that. Recently, we launched a new savings product, which is on your phone or from your phone. You can invest in as little as $30 worth of government securities.
Yes, I saw this. This is a very recent innovation, isn't it?
And it's very exciting because it will transform the savings culture in the country. And by extension to all other jurisdictions where this will be, where they'll have similar products. So with as little as $30 US dollars, the lady in the analogy or the example I mentioned a moment ago can actually buy can actually save can put savings in government securities, and when she needs to liquidate them, when she has a specific need, she can do that 24/7, any time of day or night. And that, I think, is a significant, will produce significant benefits to her and her family. So there's a lot more pressure on us to actually complete the ecosystem and fill the gaps that we can see.
That's a huge development, and so much hope there for the future. Oh gosh, I only have 30 seconds left. I'm really sorry, organizers. I'm sure we're going to go over a little bit because we just have to mention crypto. And I think it was quite entertaining when India's Prime Minister Narendra Modi earlier said, if you want to get people on board and to empty their pockets for you, tell them you're using blockchain, which got a bit of a laugh from the audience. But you know, I know that the central bank has been somewhat wary about the volatility of cryptocurrencies. As short as you can, tell us.
Cryptocurrency, blockchain, now again, to be very brief, you talk to people and their answers is always, yes, blockchain will solve that, or crypto will always solve that. What's the question again? Kind of thing.
Right.
So there's a problem there. There are risks. Obviously, the technology is very good. We understand that. But technology by itself doesn't solve problems. And this was something that was discussed earlier in this festival, that the question is, what problem for the consumer are you solving? That is the issue. So yes, the technology is there, and maybe there are other solutions that may or may not be blockchain that are more effective. I mean, we have to be open to that. But yes, it offers a lot of possibilities. So yes, for instance, there's all the discussion about the land registries, the titles, and things like that, and that's all very good. But I think it has to move from proof of concept to actual products that are, and we are cooperating with other central banks. We are not one of the ones that are going in the digital currency space at this moment, but we are cooperating with other central banks on the use of particular solutions that are blockchain driven. And we think that those transactions, or rather those solutions will be effective, will be more effective than the other technologies that are there. In terms of crypto, I think the MD of the IMF talked quite a bit about the whole business of digital currencies. But I think that for us needs to move away from the talk to proof of concept, to even beta. So it's a longer journey. But I think there are a lot of problems that we need to resolve. And I would want all the energy to be channeled to those problems that we are seeing. I talked about that lady, but there are many other problems that are not even at that level that need to be solved. That's really where we need to focus our energies. And I think that way we will transform. Our objective is to actually have a transformation of transformation of the financial sector or financial services complete. And we believe that fintech offers the best chance for financial inclusion and also shared prosperity. So that's what we need to do.
And I think that's a great place to wrap up. I was going to mention earlier in the conversation that I had a bit of an intense discussion. I was going to use the words furious argument, but actually it was an intense discussion with someone about what fintech really is. And he said, well, I can't get excited about just fast payments. And I was saying, it's not just about fast payments. It's actually about solving problems and making people's lives better. So on that note, good luck to yourself and the rest of Kenya on behalf of all of us. Thank you so much. Over the next 10 years, I hope you solve many more problems and uplift many more lives.
Thank you very much.
Governor Njoroge,
Thank you very
thank
much.
you.
Sure. Sure.